Hello and welcome. You're watching Your Trades on ET now. I am Snehisha and with me today is Shreyansi Singh. And well, Shreyansi, lots to talk about when it comes to today's market moves because you had a whole host of buzzers. But before that, let's quickly take a look at what the market breadth looked like. Nifty ended absolutely flat for the day, almost a 0.2% uptick coming in on that front. Sensex also was rather flat. Small cap index also in tandem with the benchmarks, but the Nifty mid cap space was an outperformer when it comes to today's trading session, beating all its peers in today's trade, almost 0.7% uptick coming in on that front as well. Let's talk about some sectoral gainers and losers, and you had Nifty metal that was in focus today. Let's just pull up the chart and take a look at what Nifty metal did. One of the top sectoral gainers in trade today was Nifty metal. IT did well, and you had a whole host of other sectors like FMCG, media, all of these sectors were in focus today as well. IT, however, has ended the day with a nominal downtick of 0.1%, but FMCG, there you have it. Consumption also held up pretty well in today's trading session. Moving on, let's talk about some big buzzers in today's trade. Office Space Solutions was up 15%, Ireda up 9.5%, Kalyan Jewellers, BEML, Dabur, all of these stocks are in focus, but you did have the spotlight on two stocks today, and that was Zomato as well as Paytm on the news that Zomato is going to be buying out Paytm's ticketing business for 2048 crore rupees. We also had brokerage notes coming in on this front. Jefferies, very positive note on Zomato, maintained a buy rating and given the highest ever target of 335 rupees per share. On the flip side, you had a Citi note coming in on Paytm. They continue to maintain their sell rating, but have hiked the target price from 410 to 440 rupees per share as well. Also, keeping it with brokerage notes, you had another big winner in today's trade, and that was Sharp Metallics. That stock was up almost 6 to 7% at one point in the trade day, and this is on the back of a UBS note where UBS initiated a buy rating with a target of 1200. They've also gone ahead to say that the market is not fully appreciating the company's operations as of now, so lots of upside being seen on this as well. Yes, these are the list of all the buzzers, and on the back of order wins too, you had RVNL, BEML, Hoodco, GMR Airport, as well as Welspun Enterprises, all of these stocks in focus. But while Shreyansi, this stood out to me, tell us what were you eyeing in today's trading session and what stood out to you?
Well, absolutely, and it was the PSU pack that was in focus on account of that announcement coming in. In fact, on account of that exclusive story that we have now, there may be no major changes to the new public sector enterprise policy despite the changes in divestment structure, and that is the word coming in from our sources. We'll get you more details on that shortly as well. But for now, let's focus in on the government's priorities that are also there in terms of PSUs. And it's also important to note that there aren't any major tweaks despite those changes in the disinvestment strategy as well when it comes to PSUs as well. But really the cue of the week when it comes to global cues and on the global front has been the Jackson Hole Economic Symposium. Now traders are of course turning their attention to Powell's expected speech at the symposium. That one is going to be in the spotlight. And there's really the hope for further insight into rate policy, and that is something that the market is eyeing. An interest rate cut is more or less penciled in for September, but the jury is really out on how large the reduction is going to be. So, Sneh, that is going to be definitely something that we'll be keeping an eye on, right?
Well, absolutely. So lots to watch out for, important cues trickling in from the US as well. But let's take stock of what today's trading session looked like and what we can expect going into trade tomorrow. You have Shivangi Sarda, analyst, equity derivatives and technicals, broking and distribution of Motilal Oswal Financial Services, joining us. Shivangi, thanks so much for taking the time out and speaking to us, joining us on Your Trades today. Give us a sense of what you're making this market momentum to be, because rather range bound, but surprisingly yesterday mid cap index was an outperformer, small cap was an outperformer yesterday, mid cap is an outperformer today. Do you think the strength is emerging again in the broader markets, and do you think this trend of outperforming the benchmarks is going to continue for the broader markets?
Good afternoon. Thank you so much for having me. We have seen that, there has been a strong pullback of the bulls in the market, and any small minor declines are being bought into. And of course, the put writers are also creating a strong base, which indicates that markets are, nearing its 25,000 psychological mark. Now, there has been some sort of underperformance from the banking sides, but the other sector specific action is quite strong. So we are looking at some of the diagnostic or pharma space for that matter, some of the selective auto names, and some of the energy names are also looking quite positive over here in these kind of markets. Also, interestingly, we have seen that there has been some action in some of the sugar stocks as well. So overall, it's a mixed bag. The markets are doing quite well, and we need to be just with the right kind of stocks and right sectors to be able to perform and outperform rather. We've seen that India VIX has been cooling off from the last 6 sessions, which is consistently supporting the bulls for a gradual up move. We've seen that index after the positive, opening initially from the last 3 sessions, we've seen this kind of a trend. It is moving in a sort of a range bound manner. But the good part is it's holding on and multiple supports are being respected. Buy on decline on both the indices Nifty and Bank Nifty, with of course conviction more in the Nifty side. And the next levels that we're looking at is 25,000 marks over here for Nifty, with a support of 24,650. And for Bank Nifty, we're looking at 51,500 as the next levels, and it's closed above its 50 daily exponential moving average, which is quite positive. And support could be seen at 50,750 levels.
So that just about sums it up. And like you said, it's a mixed bag. And you alluded to the fact that this is a stock pickers market. So which are the picks that you have for our viewers then?
On my radar is first Apollo Hospital. We've seen that this stock has consistently respected its moving average on the daily frame, and we are seeing good amount of short covering and follow up action over here, which is making it quite comfortable at these levels. Stock has been trading in an upward sloping channel from the last 13 weeks, and it has completed the cycle of 13 weeks of consolidation. So now it's all set for a new fresh up move over here in this stock. So recommending a buy here. This stock is expected to continue doing well with a target of around 7,100 and a stop of 6,700. So 6,700 would be a support for a target of 7,100 levels. Now the second pick on my radar is IEX. This stock is also sort of consolidated on the daily frame and getting ready for the next rally. The kind of volume surge that we've seen today, of course, it got a bit low from its highs in the initial tick, but overall stock is quite positive, and we could expect next 205 levels over here in this stock with a stop of 190 levels. And finally, I'm also liking Indian Hotel. This stock has given a decisive breakout with good amount of price volume surge over here. And the stock has been one such, consistently performing from the last 18-20 months. So we've seen that the trend has been such that any small declines are being bought into. So looking quite positive for the next target of 670 and a stop of 630 levels.
Apollo Hospitals, IEX and Indian Hotels making it to Shivangi's radar today. Thank you so much on that note, Shivangi. We'll let you go. Thanks for joining us. Let's move on then. And it's been a volatile few weeks for global markets. But what does that mean for our markets back home? Kunal takes us through how global markets are back at the levels before the meltdown. Let's go across and listen to this very well put together explanation.
The sell-off happened. Everything came down. Markets have recovered. And if you look at indices like, let's say, Brazil, they're 7% higher than that August low, right?
The August highs.
First August high, right? Yeah. So from the point of fall versus the recovery, it's a classic V. But for Brazil, that V is actually higher. It's extending, right?
It's extended.
Now for Dow, it's almost at that point from where the sell-off started.
Exactly.
Hong Kong underperforming market has recovered.
Exactly.
Right? India is a performing market which is yet to recover.
Yes.
Which means that a new high on the Nifty is coming soon. After that, could we go the Brazil way or could we go the Hong Kong way?
I hope let's go with the Brazil way. But this brings in a very important point that since we are into a global market phenomena, the sell-off was because of the way the global markets behaved in the first week of August. I think we should be on course of coming back into alignment with global markets. And the best part was on a YTD performance, we are still significantly above than many of the global markets were, even when the indices were going through a sell-off. So over the next 3-6 months, I think we should be coming back at par as well as outperforming the global markets.
And if we make a new high this time, we'll be breaking a wall.
Yes.
Right? It's a hard wall.
Yes.
And when you break that glass ceiling or make that, wall, so to speak, then you really go past through it. You shoot past through it.
You know, there have been two V-shaped corrections for our markets in just the last 3 months, whether it's the election day, where there was a very sharp sell-off, the budget day, where the sell-off was, of course, not as intense on the election day, but then again, those two days indicated that the markets have made a higher bottom, and those bottoms have not been tested. So which means what we are putting in case over here is that if we break past about this 25,100 mark, which was the previous high, we could have maybe solidified or made a very strong base for Nifty as well.
That's a great point.
Alright, then moving on, let's get a little more sector specific then, and it's the chemical space that has been in the spotlight. We caught up with Amit Khurana, head of equities at Daulat Capital, who talks about the chemical space being the only space that has been upgraded from their side. Let's go across and listen in to which are the stocks that they're preferring in the chemical space then.
Chemicals is the only sector which has possibly got an upgrade from our side, other than the consumption names that we are backing up. Essentially, it's a play that most of the capex programs for the companies are going to get done away with FY25. And largely, we've seen inventory corrections, and especially in some of the specialty pigments, specialty chemicals, some of the categories seem to be showing a much better visibility on sustainability of price and the demand environment. Now, this is a very, very early view that we've taken, so it probably will require a much higher level of patience for these stocks to perform. Some have re-rated very materially. Specifically on this duty, it benefits Deepak Nitrite much more. Overall, our preference is to play the chemical sector more from a bottoms-up perspective, given the very varying business models that you have, and each product has its own nuances to capture. So at this stage, we prefer Atul and Sudarshan Chemicals. We also like Fine because the balance sheet is well capitalized, very strong balance sheet in terms of cash on the balance sheet, overall capex plan just about starting. So these are some of the names that we have backed up in the last few quarters and continue to back up those.
A positive outlook coming in from Amit Khurana on the entire chemical space. But on that note, we'll slip into a short break on this edition of Your Trades. More to talk about the day that was and the outlook for tomorrow on the other side of this break.
Back. Thank you so much for staying tuned in. Well, let's take a look at the derivatives roundup then. And when you take a look at index futures trend for Nifty as well as Bank Nifty, you're looking at a long build-up come in. So there you have it on your screens. Let's also take a quick look at India VIX then, and that was around those 13 levels all through the day, and currently also around those 13 levels is where India VIX is at. In terms of active calls levels for 22nd August expiry, let's take a look at where mild call buying as well as call writing was observed. So 24,900 is where you saw mild call buying, 25,000 as well as 25,000 for resistance as well as mild call writing was the level that was also observed. Let's also take a quick look at active puts for 22nd August expiry as well. Now, put writing was observed at 24,700 as well as 24,600, and it was the 24,700 level that formed a support base as well. So that currently is the derivatives roundup that we see shaping up right now, Sneha.
Absolutely. So important levels to watch out for: 25,000 on the upside, 24,700 on the support. But let's talk about the big story of the day, and in fact the stock of the day today has to be Shyam Metallics. That's a counter that has ended the day with a slight more than 6% gain coming in on that front. You have UBS that has initiated a buy rating on Shyam Metallics, and my colleague Ashesha is standing by with more details on their rationale and more details about this note as well. Ashesha.
They are very bullish with respect to the outlook going forward. So they've initiated coverage with a buy stance. They've given a target price of 1,200 rupees per share, implying over 60% premium as compared to yesterday's closing price. Of course, the stock has run up nearly 8 to 10% in today's trading session. They expect earnings to grow, compound at a solid 39% over the coming years. In fact, as far as ROCE is concerned, they expect it to improve from 22% that the company had reported in FY24 to about 28% in FY27. As far as EBITDA is concerned, they expect EBITDA CAGR of about 39% over the corresponding period. They believe that the company is on a high growth and transformational journey for the next couple of years. Strong earnings growth visibility is what makes them very bullish on this counter, and they also believe that the market is not fully appreciating its integrated operations. So on the back of this report that has come in, where they've initiated coverage with a buy rating, target price of 1,200, Shyam Metallics is soaring in trade today.
Later, thanks so much for taking us through that. Let's talk about a stock that was in focus today. In fact, a couple of stocks, Zomato and Paytm, but let's focus in on Zomato because Zomato is soon going to expand its going out segment, going to be acquiring Paytm's entertainment and ticketing business for 2,048 crore rupees, and they will also be launching their independent app called the District app. And 12 months after this agreement goes through and all the processes are in place, 12 months after that, District will become an independent standalone app, and after that the entire ticketing business of Paytm will be moved out of Paytm and put on this District app. Basically, this is what the deal looks like, and on the back of this you also had brokerage notes trickling in. You had Jefferies being positive on Zomato, and the Citi note where they've maintained a sell rating on Paytm but have gone ahead and hiked the price. Remember, Jefferies 335 target price that they've given Zomato is the highest ever given by any brokerage for Zomato. Last week you had UBS that gave 320 rupees as the target price, but now Jefferies has gone ahead and surpassed that. But earlier in the day we caught up with Karan Taurani, Senior VP at Elara Securities, to understand what he had to say about this acquisition from a valuation standpoint and the growth impetus that Paytm's ticketing business can provide to Zomato. Let's go across and listen in.
If you look at this acquisition rather in terms of valuations, I think it's quite reasonable. One would not call it, very attractive, but you have to articulate the fact here that there are only two players in the live ticketing business today, which are large in nature. One of them is Book My Show, and the other is Paytm, which have got certain amount of scale. So Zomato here, is known to turn around companies. We've seen that in the case of Blinkit. We've seen that in the case of the food business, wherein they entered the food business much after Swiggy had entered, and they are doing ahead of Swiggy in terms of numbers and market share, so on and so forth. So I think clearly this market has an opportunity to grow at about 20 odd percent. The business, does make an EBITDA margin of about 10 to 15% on a steady state, but the management has guided for a very strong EBITDA margin in the medium term, for this business. Net, I think it seems like a good acquisition because clearly Zomato has got a large customer base of the youth audience, which is hooked on to the food and the quick commerce business.
So that's the word coming in from Karan Taurani when it comes to Zomato. That one was in focus all through today. But let's also take a look at which other stocks were buzzing in trade and in focus on account of news flow, and Gaurav is standing by with that list.
Well, yes. First, let's talk about the stocks which are buzzing on the back of the buyback announcements. So first we have is Transport Corporation of India, where the company is going to hold its board meeting on 24th August to consider buyback of shares. We also have Aarti Drugs, who is also going to hold its board meeting on 26th August to consider buyback. And on back of this, we saw some stock movement, positive stock movement in these counters. Next, let's talk about Irida, because this company is going to hold a meeting and discuss about fundraising of up to 4,500 crore rupees on August 29 through QIP or other means, and that is why this counter was also up more than 8% today. Next, let's talk about Paras Defense, because this company has got license. So Ministry of Commerce has granted license, industrial license for manufacturing of various defense products for the company for the next 15 years. And at the same time, this company is also going to hold board meeting on August 27 to evaluate proposal of fundraising via QIP or other means, and that is why we saw this counter also hit its upper circuit today. Next, let's talk about Eris Life Science, because substantial block deal happened in the morning where 7.2% equity changed hands at a price of 1201 rupees, and the overall size of this block deal was around 1187 crore rupees. And when we talk about the stock performance also, we saw some positive momentum in this counter. Lastly, let's also watch out for Union Bank, because company held its analyst meeting where they gave some key guidance. So when we talk about the loan book growth, they have guided around 11 to 13% for FY25. They are going to maintain net interest margin around 2.8 to 1% and as 2.8 to 3%. And on back of this, we may see ROA somewhere around 1 to 1.1% for FY25. And on back of this, we saw this counter was also trading in green today. So definitely watching out on all these counters in a days coming ahead as well.
Gaurav, thanks so much for taking us through that list of all the big buzzers in today's trade. But with that, I'm afraid we're completely timed out on this edition of Your Trades. From Shreyansi, me and the team that put this show together, thanks so much for watching.